Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 18th of November, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go for our usual Monday run through in here today, which is a slight twist on the normal run through, where we take a look at what I like to call the shape of the week, where we look at what's kind of come on from a macroeconomic, fundamental, geopolitical, individual company earnings, and central bank. What is the outlook for the week? Why do we do that when we're day trading at trade day? Why do we do that? Is because even though we are limited to trading within the day and we're day traders, it's good to know what's going on for the whole week because it can affect the volatility at different parts of the week. So if we're expecting some very volatile events maybe later in the week, it might mean the volatility is less at the beginning of the week. And then that would mean that you might slightly adjust your trading strategy, thinking that there's going to be less volatility. So you might adjust how you have your stops, how you have your targets, given your expectation of less volatility. If you're expecting maybe more of consolidation ahead of some big event. So it's important to take a look, I think, at this, what I call the shape of the week. So let's kick off. We're going to go through the macro matters summary. Now, these are in the, if you don't know, in the three columns below where you're watching this. If you're watching this live or on the recording, if you're watching this on YouTube, obviously, but if you're watching this in the Trade Day members area below where this streams live, we have the three columns. The left-hand column, technical analysis, we'll come to that shortly. Get daily technical analysis reports in there on the S&P, the NASDAQ, oil and gold. Then we have the second column, which is the weekly macro update. So the macro matters, which is the longer version that you see here. And then we have the shorter version, which is the macro summary. So that's the middle column. And then in the third column on the right, we have the news service provided by LiveScoop, our news partners. So, let's go through this then. So what did we have last week? Well, stocks were down. Having had the big run up the previous week after the Trump election due to pro-business policies expected. We saw that fade yesterday. Powell really saying potential for delaying rate cuts and also ongoing net trade tension concerns impacting negatively on international markets. Saw stocks retreat on Thursday through Friday mostly in here as markets were a little bit spooked by Powell's comments, I think, more than anything else. The CPI report was the big focus last week, and that came in pretty much bang in line with expectations, had very, very little impact on Wednesday. There's the comments on Powell, talking about maybe a little bit more caution on cutting rates. Retail sales, which we had at the end of the week on Friday, actually beating expectations. Now, this, I think, added into the concerns on Friday after Powell's comments on Thursday. So Powell's basically saying the economy is strong. So maybe we don't need to cut rates as aggressively. And then on Friday, we get a strong retail sales number. So kind of counterintuitively, we're in this scenario now where good data, positive data on the economy is seen as kind of almost negative for stocks because stocks want the rate cuts. Okay, stocks want interest rates lower. And when we see good data on the economy, and whilst inflation is still getting towards, but still above the Fed's 2% target, it might mean a more cautious, a less dovish, so de facto more hawkish Fed, less likely to cut rates. And so strong data, meaning fewer, potentially less aggressive rate cuts, and then that's seen as a negative for stocks. So it's kind of counterintuitive, right? Strong data, strong retail sales should be good for the economy and good for stocks. But in this case, I think that's added a little bit of fuel to the fire of the concerns from Powell on Thursday. So that strong data on Friday kind of counterintuitively saw markets sell off on Friday, US stock indices and global stock indices. The big focus going into this week, and we'll run through the calendar in here shortly, but it's going to be on NVIDIA. NVIDIA is always much delayed compared to most of the major earnings reports, which we had back in late October, early November. And what we're seeing is the release of the last of the Magnificent Seven stocks, as they're so called, Nvidia, and arguably as monikered, as named by Goldman Sachs, the most important stock in the world right now. It's added a huge percentage to the S&P's rally so far this year. And so I can't remember the number. I did see the number. I read it this morning that it's added something like 25% of the S&P's rally is due to the Nvidia rally or something ridiculous like that. Maybe not quite that much, but it was a large number. So we'll be watching that. It's going to be super critical going into this week. So last week, equities were down. US yields continue to track very slightly higher. The US dollar index hitting a multi-year high. Gold futures sold off in reaction to that strength in the US dollar. And oil futures actually at the lower end of a much broader consolidation range the market's been in recently. Central bank activity is light this week from the US perspective, with the Reserve Bank of Australia meeting minutes, which is not going to really impact anything you guys are looking at, coming up on Tuesday, and the People's Bank of China interest rate decision on Wednesday. The main data going into this week are going to be the global flash PMI data, which is split between Thursday and Friday. Thursday for the US and Friday for much of the rest of the world. But we also have a lot of inflation data from around the globe. So from EU, Canada, UK, and Japan, inflation data, CPI data coming out throughout the week. So we're certainly watching that as well to see if global inflation in other economies is starting to ebb lower, or is it getting sticky above these kind of 2% levels, between 2 and 3%, which most global data is pointing is at the moment, whether it's getting sticky around there. And maybe that means we won't see interest rates eased globally as quickly, and that means that the Fed won't be as pushed to ease as quickly. As I said, in the end, Nvidia is the really big focus on Wednesday, but we also get a couple of large retailers from the US. So Target is also on Wednesday, and ahead of that, Walmart on Tuesday. So going through the calendar for this week, we see nothing of note today, nothing really of note from the US tomorrow either. EU and Canadian CPI though on Tuesday, and that PBOC interest rate decision. So US data is very, very light this week. German and UK PPI, then CPI, and then that US flash PMI. So flash PMI data on the 21st on Thursday, and then on Friday we get a lot of that the other CPI data, and then we also get the UK and German flash and European flash CMI, ending the week off with the US Michigan consumer sentiment. And so, if we, I don't know why I've got this one open, but let's get rid of that. Oh, no, I just lost the... So the focus on today, not much to focus on we do have Fed speakers throughout the week, though, so we will be watching out for those Fed speakers. Let me just go back and quickly pop open the trade day members area. Let me just go into that. And just pop out the calendar. Just bear with me while I get that open. So... Sorry, guys. Just close this. But you can see in here the calendar for today in here. There's very, very little from the US side of note in here. So we do get, where is it? I think we have a Fed speaker today. Yeah, Goolsby is speaking today. So watching out for Goolsby later today. That's going to be the main focus. I'm going to close this down now. I was going to start hearing. And then on the earnings side, say Walmart and Lowe's tomorrow. Nvidia is the really big one on Wednesday with Target as well. So those are going to be the things we're going to watch. But really, Nvidia after the bell on Wednesday is going to be could really give us some impetus either way. Risk is all to the upside from my perspective in here. Let's turn our attention to the morning briefing out of Bloomberg in here. Jockeying for the top Treasury jobs slow selection in here in the US. Treasury Secretary in disarray. President-elect continues to field top role. So all politics in here, but nothing really concrete is going to impact markets right here, right now. We did get the okay given from Biden to authorize long-range missile strikes into Russian territory, potentially escalating the conflict. This is something we need to watch out for. Developments from that, developments whether Putin says anything on the back of that. On the overnight in here, Tesla is lifting NASDAQ futures. And so we're still looking on this treasury pick, as we said in here. Bitcoin continuing higher on the overnight. But not much too much going on the overnights in here so far. Tesla, excuse me, shares are up in the pre-market in here. Trading speculator Donald Trump will ease self-driving car rules. So kind of a little bit of news on that, or speculation over the weekend. Global shares, though, edging slightly lower. Dollar bond yields near their multi-month highs in here at the moment, and Bruce Wall Street keeps a wary eye on the video, so that's what we're watching for. So if we go a run round through the markets in here globally, Nikkei's down about 1% this morning, but Hang Seng up just under 0.8. On the European bourses, on the so far today, little change really. The FTSE up 0.15, German DAX down 0.3 and 0.25% down on the French CAC. And if we look on the US futures on the overnight so far, so not too much activity. Slight rebound in here on the Nasdaq being helped higher. Where's this still loading? Loading. Here we go. Eventually. But Nasdaq up in here on the overnights with, so you can see, 0.35% in here. S&P pretty much a little changed. So a little change on the S&P, but about 30% up on the Nasdaq, being helped up by Tesla. Turning our attention to the Fed Watch tool, really not too much in here. Changing from what we've seen recently, despite those retail sales numbers in here. So we're sitting about 60%, only a 60% chance now, just over 60, just nearly 62% chance that we get a rate cut even in. So potential for a pause in here. It's getting close. I mean, I know it's not even, but market now started pricing potentially no rate cut in December. And then I've been jumping to the March, and if we look in March now, so this is 2 rate cuts for March. So 3 meetings, only a 40 plus this in here. So just over 50-50 that we get 2 rate cuts in here, but potentially we only get 1 rate cut in here being priced in, or fewer by March. So potentially, the market's even got 11% chance that we don't get any more rate cuts in here, and the rates are still the same in March as they are now. So no more rate cuts. So 11%, I mean, small percentage chance, but it's almost 50-50 that we get either 1 rate cut or 2 rate cuts in here. And very much now not pricing in. This is 3 rate cuts, only 11% chance that we get a rate cut at each of the next meetings. So the market really signaling and reflecting the fact that the Fed has shifted away from dovish and a more hawkish tone from the Fed. So it's not hawkish as in we're raising rates, but less dovish is de facto more hawkish. And that's why the dollar's so strong in here. That's why yields continue to push higher. So on that note, in here you see in here on the charts, bond prices still remain low, near recent lows in here, right the way across the curve in here. Particularly at the short end continue to nudge to lower prices. That's higher yields, and that's a reflection of the Fed being maybe less dovish in here, and that's certainly started to impact in here to the into the markets. So we've seen the stocks obviously Friday, significant sell-off Friday. And this was on the back of what I spoke about just now. So Thursday, Powell, hawkish. Friday, then we get the strong retail sales. Counterintuitive, right? Counterintuitive, and not what we would quite expect. Strong number, stocks down. I'm hanging on to a more bullish tone in here. I think we get a rebound going into today. But if we get further deterioration in here today, then it certainly starts to shift more negative. So we're watching out for that. And if we look on the overnights in here, you will see obviously stocks sort of maintaining on the S&P. Why is this? Here we go. So in here on the S&P, a significant sell-off in here, playing with that and hit that 13-period EMA last week on Friday. So Thursday through Friday, the combination of Powell and then the stronger data, counterintuitively sending stocks lower, playing with a 13-period EMA, kind of flat as we go in here to this morning. But if we look at the Nasdaq in here, we are getting a slight rebound way through that 13-period EMA. Gave back half of the Trump rally, the Trump victory rally, more than half in here, but rebounding this morning. So I'm watching the Nasdaq to maybe take us back up. My view today is I don't think it's going to be a big rally day. I think it's going to be a consolidation day. We've got NVIDIA coming up. I think what we see the market move back into the range. So Monday, Tuesday, I think are being consolidation days. I would not be surprised if we are trapped within Friday's range, Monday and Tuesday ahead of NVIDIA. And remember, we get the flash PMI from the US and then from the rest of the world on Friday. So Thursday and Friday. US Thursday, and then Friday from EU, UK, etc. So my view would be we've got a lot weighted into the second half of the week, Wednesday through Friday. I think the market sees a rebound back into, I think, a positive consolidation range type activity on the first 2 days this week, given we don't have hardly anything coming out of the US with regards to data. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and we'll be back with you with another Bull versus Bear webinar on Tuesday. Bye.